Hi there, this is Tony D of iTech Finance and Aiden Accountancy. I really trust you are well. Now, this video is all about your tax efficient remuneration in the 20 to 21 tax year. This is your tax efficient remuneration coming from your UK based limited company, and it's a combination of salary and dividends. The 20 to 21 tax year spans from the 6th of April 2020 all the way through to the 5th of April 2021. So in order to make this video very useful, it's very practical, and it's going to go down into, what I'm going to do is go into detail as to what kind of strategies you could actually adopt in terms of your tax efficient remuneration, what level of salaries are available to you tax efficiently, considering the national insurance thresholds as well, and also what are the different levels and thresholds of dividends. I'm going to jump onto the laptop, I'm going to do a screen share with you. We're going to go through some numbers, we're going to make this as practical as possible in order to help you so you can know your numbers well in advance of the next tax year and even early in the tax year, so you can make informed decisions for your business and finances. Okay, well, off we go. Let's jump on the laptop.
Okay, here we are guys, we're onto the laptop, and here's the title of Tax Efficient Salary and Dividends from a UK limited company in the UK tax year 20 to 21. So we're just going to run through a few basics to begin with, just as a refresher for perhaps most of you. For some of you, this may be quite new material. Your limited company and you, the director shareholder, are separate legal entities here in the UK, okay, so do remember that. Even though as a director shareholder you are the manager and owner of that legal entity, you are still in the eyes of the law quite separate and in accordance with the Companies Act 2006. Your limited company's money is not your money, well, at least not while it's in the limited company bank account, okay? It belongs to the legal entity, which is your limited company. It only becomes your money, or the money within the company becomes your money, is when you pay yourself a remuneration, and that's what this video is all about. Now, a couple of assumptions here. I'm going to assume throughout this video that you have no other sources of income, okay? It's just for simplicity and not to overcomplicate this video. My goal is to keep it as simplistic as possible, although accounting in nature is not particularly simple, and it's not that straightforward, and I can understand if it's not going to be that easy to follow, but certainly you know, keeping that assumption will keep it simpler than it could be. And your company does not, and I repeat, does not qualify for the NIC employment allowance of £4,000 in the 20 to 21 year. Okay, although I am going to address that and sort of talk through, well, what happens if it does qualify for the employment allowance. The personal UK tax year for 2021 spans from the 6th of April 2020 to the 5th of April 21, okay? And just so you're very clear, the UK personal tax year is not the same as your limited company year. Okay, I'll repeat, is not the same. So your limited company, the company year could be from the 1st of April to the end of March, for example. That is the most closely aligned company year to the UK fiscal tax year. Okay, but in many cases your company could be the end of February, it could have a company end of April, May, any whole month basically. So they're not one of the same things. A director's salary can be taken from pre-company tax profit. That's pre-corporation tax profits. Okay, so it's a bit like booking an expense, or shall we say expenses through your company. Okay, it's all pre-tax, and therefore effectively it gets a 19% discount. In this case, your salary works in the same way. So it is one of the most tax efficient ways of remunerating yourself from your company, although the tax benefits do have a cap. Dividends are only taken from post-company tax profits. Okay, so only if your company is making a profit, or if it's not making a profit, it has historical reserves. Okay, so in simple language, it's got savings that have already been taxed before in previous years, and if that's sitting in your account, then great, you can take dividends. Okay, but you have to have sufficient funds in order to pay that, and it has to be from post-corporation tax profits. And dividends do not attract income tax or national insurance at all. They are subject to a dividend tax. So an optimal director salary is what we're trying to achieve here, not just a minimal director salary. Okay, there is a difference between the two. A minimal director salary is the lowest amount that you can possibly pay yourself. Well, technically, the lowest amount you can pay yourself is probably £1. Okay, in terms of a minimal director salary. So what we're talking about here is what's optimal in the view of tax efficiency. Okay, this is where the focus is. So an optimal director salary can either be at the personal allowance threshold, which in the 2021 year is now £12,500 per annum, or, and the second bullet point, at the primary class 1 national insurance NI threshold, which is £9,516 to be precise per annum in 2021. Now, there's two options that I have presented you with here. Now, some of the more technical ones of you out there will actually argue, well, hang about, there's a third option, and that is at the secondary class 1 national insurance threshold, which is lower than the primary class 1 national insurance threshold. And you can actually see in the third bullet point that the number of that secondary NI threshold is actually £8,788. I can highlight it here. £8,788 per year. So it's slightly lower than the primary NI threshold. However, I'm only going to focus on the top two because there's a good reason why I am actually advocating as a minimum the primary level, and that's the interconnection with state benefits. Okay, and there's a reason why there's a primary and secondary threshold. So yes, whilst you may pay a marginally small amount of national insurance on the primary class 1, the benefits more than outweigh that, and I will demonstrate that shortly. Now, the third point is not only just to tell you the secondary NI threshold, which is 8788, but also there's a dependency on whether you're the only direct employee paid above the secondary NI threshold. So this comes back to the employer's NIC allowance of £4,000. So the assumption here, the calculations I'm going to go through, assumes that you don't qualify for this, but again, I will make mention and give you a little bit of clarity as to what happens if you did. So here's the first strategy, okay? And that is a strategy, and in these two strategies I'm going to present to you is what I'm assuming here is that your aggregate earnings are going to be around about £50,000, okay? And I'm pitching it at a level as so, you know, it's reasonable, it's quite median for a lot of limited company directors. Some of you may be lower than that, or you may be higher than that. But generally speaking, you know, it's just to give you an illustration of the principle and also a good flavour of the numbers. So in this strategy, you can take the director's salary at the personal allowance threshold, which you can see here is clearly £12,500 per annum. Then there's also a tax-free dividend, okay? So you can take £2,000 at the 0% nil rate, okay? So there's no tax on that dividend whatsoever. So it gives you a subtotal, so far £14,500, okay? And then a dividend, a further dividend over and above that will actually attract an ordinary rate of dividend tax of 7.5%, okay? And the cap on that is £35,500 over and above this amount. So in other words, when you put all of them together, you've got an aggregate earnings, gross earnings, guys, here, okay? This is gross, of £50,000, okay? So that's your total gross earnings. All right, so what does the tax look like on that? Well, again, let's break it down. On the director's salary, there is zero tax, nothing at all. Remember, that's your personal allowance. You can earn that much tax-free, income tax-free. You got the tax-free dividend. There's no personal tax on that either. And then there's the dividend, the ordinary rate dividend, which is £35,500. And then if you take 7.5% of that, that gives you an amount of around about £2,662. Okay, so it's in this figure already. But what happens here is because your salary is at the personal allowance level, it exceeds the national insurance threshold. So therefore, there's going to be some class 1 primary, i.e. employees national insurance. That's what you as a director employee pay, okay? And then there's going to be some class 1 secondary employers national insurance, and that's what your company pays. So what I've done is added the tax here. I've added these all together, and it comes out to an amount of £3,535. Okay. Now, again, amongst the technicians, if you are quite a technical person and you know you follow accounting, or you have quite a good aptitude in accounting, what you will probably know is that Class 1 secondary employers is actually paid by the company, not the individual, and you're absolutely right. But just for illustrative purposes here, what I want to demonstrate to you is what happens, or what is the effective rate of tax that is actually generated by the level of director salary that you take. Okay, so I can compare and contrast two scenarios. Nonetheless, if you are director, if you are owner, manager, owner, director of your company, the fact that your company pays it or you pay it, the fact is, you know, economically it's still, you know, one of the, in a roundabout way, one of the same, and you're still bearing that tax. So anyway, it comes out to be 3535, and that's effective rate of 7.1%. So 3535 into 50,000, that's 7.1% and 7.1 pence in the pound of tax. Now, let's look at the second scenario. Strategy number 2 is to pay your director salary at 9516. So that's at the primary NI threshold. Okay, 9516 plus 4984. Now, where did that 4984 come from? Okay, so it doesn't matter what level of director salary you pay yourself. Okay, if we go back to the previous slide, you will still get this tax-free dividend. You can still do that. Okay, so part of that 4984 includes the £2,000 tax-free dividend. The rest is the difference between the personal allowance level, 12,500, and your director salary. Okay, so don't forget, you're taking a director salary up to 9516, but your personal allowance is 12,500. So there is still a difference there. Okay, and that difference you can then take as a dividend, and again, it won't attract any tax. So adding that in gives you, and again, this is your personal remuneration, gives you 14,500. Okay, again, if I flip back, it's the same subtotal as the last, or strategy 1. And again, you can take your standard level of dividend up to 35,500 to take you to the next threshold, which is £50,000. And again, let's do the maths. 7.5% ordinary rate on 35,500 here. That gives you an amount of tax. Plus, in this situation, you'll end up paying no Class 1 employees, okay, because you're at the threshold. It's only just started, and therefore there is no, mathematically, there is no Class 1 employees to pay. And there will be a really small amount, calculated about £101 of employers' NI, because don't forget there's a difference between secondary and primary NI, and primary exceeds secondary, so therefore there's a small amount of national insurance to be paid. So the total tax liability in this situation, which is 7.5% of 35.5 plus the 101, is 2764. So you can see here an effective rate of 5.5%. You can see again, if I just flick back, there's quite a difference, okay, in the amount of the total tax liability for these different components, where you make just one decision, and that is the level of your director salary. Okay, 9516 compared to 12,500. Okay, now again, if you are technically quite up to speed with accounting, etc., one thing you will notice is it ignores corporation tax, and again, you are absolutely right, because there is a corporation tax benefit of actually taking more director salary as opposed to a dividend. Okay, so that hasn't been factored in. I do appreciate that, and I do accept that, but what again, I wanted to just try and make this as simple as possible to compare and contrast the two. Okay, so in real terms, even though it's 3535, what you will find is in there, okay, there needs to be a corporation tax saving element, because the director salary is actually high. And don't forget, director salaries are paid before corporation tax and dividends after corporation tax. Okay. Now, so in this scenario here, what it is, you've got aggregate earnings of 50,000. Now, if your company can pay you more, all well and good. And if that does happen, you can take up to £100,000 to take you to the next threshold, which is £150,000. Okay, and that 100,000 is taxed at a marginal rate of 32.5%. So every pound you take over and above that 50,000, 32.5% is dividend tax, up to a maximum of 100. And then once you reach £150,000, you then hit what's called the additional rate, and anything over and above 150,000 aggregate in terms of dividends attracts a 38.1% or 38.1 pence in the pound dividend tax. Okay. And very lastly, I just want to finish off on two things. There is also the personal allowance withdrawal, and there's the child benefit withdrawal at certain thresholds. Okay, so this video isn't going to go into those into any great depth. There are separate videos that I've done for those, but you just need to bear them in mind.
So I really hope you have found this video useful, practical, and you can go away and use its contents and apply it to your own business, your own salary and dividend remuneration strategy for the 2021 upcoming year. Now, if you like this video, please like, subscribe, put in a comment there. I certainly go through quite a lot of the comments, read them and respond to them where I possibly can. And also, you know, let me know if there are any further videos that you would like out there, any other content that you'd find useful that I can sort of diarise to do. Once again, thank you very much for watching, and until the next video, keep well and all the best.